Hey, how's it going, everybody? Welcome back to the channel. Before we get started, please drop a like, subscribe, turn post notifications on, and let's get right into the video. So, actually, also remember, I am no financial advisor. This is just for entertainment purposes. And yeah, just a little warning. Remember, this is just doing updates on the account, nothing too serious. But yeah, we're back on my brother's account, the second account that we have. And this account is doing very well, especially since this account, as you all know, has Nvidia. And you guys know Nvidia had earnings yesterday, and they did crazy good. Crazy good. I read over the numbers. I saw that they did 100% year over year, and they were expected to do 60%, which is crazy. And of course, after their earnings, they popped, right? They went well over $500. And of course, there's a little bit of a sell-off, but it's still higher than it was yesterday during the day until the little pop on earnings, right? So Nvidia looking very, very interesting, right? Very interesting. Even though it's gone up such a huge amount, well over 200% now this year, and like for the past full year, up 176. I mean, you could have got this baby at low, like around like low 100s, right? Low 100s, and now was at a point where it was over $500 yesterday, which is crazy, right? Crazy. And I told my brother, I'm like, hey, I think this is a very good position to get into. I think just that the timing, right? The timing of when we got into the market with this account, it was just stupendous, amazing timing. And that's why it's always important to have cash on the side, right? And this account has a lot of cash, $6,000 in cash on the side, which is very good. So if there ever is a time where the market goes down 20, 30, 40%, this account is always ready to deploy cash. Maybe we have a little bit too much cash on the side. Maybe we would like to bring that down a little bit more. Maybe if we would have 3,000 to 4,000, that would be better. So we'd be more exposed into the market. But right now, most of the stocks that we have here are tech related. So we might want to diversify this account a little bit more. Like I said, same thing with the other account. I've been asking you guys for some dividend stocks, some other stocks to be a little bit more diversified, to have a well-rounded account. So usually when tech is doing very, very well, the dividends and value plays are not doing as good, and there's always like trading around. Sometimes most people are in tech, and most people are in tech, those other types of stocks, value dividend plays, are down a little bit more, but they pay dividends, right? So that's pretty good. And whenever tech goes down a lot, value and dividend plays don't go down as much, and or are going up, because the money's always going around, right? Money's always going around. If people feel like tech is overvalued, they'll take money out of tech and they'll put it somewhere else. And if both is going bad, that means there's a correction, or there's a recession, right? And of course, when there's a recession, tech, high growth, those would get hit harder, like we saw before. We saw Meta, Tesla, Shopify all go down 50, 60, 70, 80%, right? Like imagine Meta at one point was a $300 stock, or close to 300, or well over 300, sorry, well over 300. And at one point it went down to 80. Meta went down to $80 when it was a $370 stock, $380, right? What in the world? And Meta is one of the top 10, top 5 best companies ever, right? That is just crazy. That just blows my freaking mind how that even works, right? Same thing with Tesla. Tesla was a stock that was $100, low 100, and where this baby is like usually over $300, right? 400 at its peak, and this baby was close to almost under $100, right? So this account is way more well-rounded, less risky. Most of the companies that we have here are profitable, except for one ChargePoint. ChargePoint is the only outlier here, But if we look at our equity, almost everything is well rounded, right? Anything from $200 to $500. So nothing way too crazy. Where my other account, which we have Shopify being like 40 or 50% total of the portfolio, where this one, most of it's like 6 to 10% of the account, right? 6 to 10%. There's a Amazon 9% portfolio diversity. I think Meta might be 10% portfolio diversity. Tesla right here, probably 10% or 11% there. 10%. Yeah, so most of it is pretty much well rounded. The only thing about this account is we need to get a little bit more into value and dividend plays. Not really something super like specialize in. I would have to learn more about that, but that's something we would need to do. But in terms of percentage gains, total percentage gains, we're up basically on every single thing except for ChargePoint, and then we have SCHD, something that we use for dividends, and PayPal. PayPal is basically at its lows, so whenever this baby starts to go up, we'll do pretty well on this. But other than that, almost everything is up pretty well. We see our ETF QQQ is up 17%, Amazon 36.16%, Google 25.99%, Meta 78%, Tesla 35%, Shopify 18%. Shopify has been going down a little bit, so whenever it goes back up, we'll probably see a lot of growth on that. Palantir 64%, like ChargePoint down 29%, Nvidia up 100%, AMD 18%, SCHD down 0.4%, and PayPal down 5.3%. And I don't know if we got that up. Oh, look at this. This is another thing that they changed on Robinhood, where we can actually see like the differences, right? Let's see how the difference is here. Year to date, we're doing pretty well compared to VOO. We're up 11.6%, even though we're well over 50% in cash. Well over 50% in cash, which is good. This account not in margin, unlike the other account. So this account is, compared to the other one, way more safer. And like I said, we have $6,200 in cash. So we have less than $5,000 in our account total, right? So we want to slowly switch that up. If the market goes down more harder, we'll probably deploy more cash. I'll tell him I think it's time to deploy more cash, and let's see if he agrees, and then he can start seeing some more purchasing in his account. Maybe get some different stocks, different types of stock, maybe some value stocks. So we need to look more into that. I had to do some more research to see some stocks. I know some people already suggested some things, so I would have to look more into those. But for those, like I said, we would be looking more into the dividend side. So of course we would like to get very good prices, and of course if there is some like the growth, if we can get like 8 to 10% growth on those plus the dividend, that would be very good. If not, the dividend would be fine as long as we can bring some income into this account. But yeah, there's a little quick update on this account. Nothing really changed. We haven't really bought or sold anything. We just dollar cost average every week, add a couple dollars to every single thing, and slowly build the account up. Like I said, the goal is to slowly build this account up to 15, 20, 25, 30, 40, 50, 100K over time. And you just slowly watch the growth as time goes on. And remember, this is just the beginning. We just started this account not even a year ago, right? We started this account in December of last year. That's when we started, right? So yeah, doing pretty good. But yeah, that's the video, guys. Thanks for watching. Like the video, subscribe, turn post notifications on, and I'll see you guys in the next one. Peace.